This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, October 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down a quarter at 418 3/4. November soybeans were up 2 at 1020, and December Chicago wheat was up 2 at 517 1/4. Government's still shut down, so we got no export sales announcements here this morning. We're now through 3 of 23 settlements for our harvest price discovery for crop insurance. Corn remains at 419 and soybeans are at 1018. Good morning, guys. I guess what we know as we start the day, we're still not getting any reports, so we're not going to see crop progress here this afternoon. We won't get inspections, and certainly it doesn't appear that we're going to get the October report on the 9th, which would have been this Thursday. So not a whole lot of new data to go through. However, tomorrow we are supposed to get some news out of Washington on what's going to be happening with regard to farm payments, and most notably in the soybean complex. So that'll be interesting. Tomorrow should be, we should get a little bit more guidance, hopefully, on that front. So I guess with that, Dustin, maybe a few thoughts here to kick off the week, and then we'll throw around the room.
Yeah, Dan, I think, the market doesn't have obviously the yield data that I would normally want to see this time of year to get its direction, but we still should see, the action of the market. Is there a ton of corn coming out of the field, working its way into the pipeline early this year because of the weather conditions? We know that river levels are, quite low going into the next couple of weeks. It still could be very interesting market action over the course of the next 30 days. One thing I want to continue to focus on is the expiration of, or just basically the fall settlement of the crop insurance. There's some confusion out there when we say expiration of insurance. Sometimes it's all it is that it's the price can no longer lock itself after we get through the month of October for the majority of RP growers, right? The corn and soybean insurance policies. If you have a 95% insurance policy, there's a good chance that you have revenue loss from just the price only component. And if we have just no yield gain or loss, we're in a payment on the corn side. So any further drops from here on this, I'm talking about the 95% ECO policy, and if the county is at its average. Another 20-cent drop from here would be a significant increase in payments for many, many growers. If that happens during this month, if a break happens after we get into November and we've settled at today's price, there's no longer increased payments after that point. So the goal is to make sure that you have a good enough marketing plan after insurance expires to ensure that we're not going to get any sort of first notice day weakness like we saw in 2023. I think we want to make sure we have a floor replacement.
Very good. Ben, what's on your mind this morning?
Yeah, we're kind of flying blind here with government data. We were talking before we came on the show about yield and what that would mean this time of year. We started to see maybe an aggressive reduction. There might sow a little bit of hope here in the corn market. And conversely, if it was marginal reductions, we would probably see some pressure. I think we just watch and see. Pretty good gut shot on the quarterly stocks report to have another bearish report in a row, which we quickly shrugged off. I think partially due to talks scheduled with China. And I think we're going to find out here and test the metal and see if there's a managed money that wants to sell it below the 50-day again. It'd be interesting to see if they pile back in. I don't think they will, not wholeheartedly, but certainly it's a possibility when we let these automated trading programs just kind of go, especially when we're heading into what should be the gut slot of corn harvest over the next 2-3 weeks. So just watch and wait. I think Dustin gives prudent advice to make sure you're comfortable, less crop insurance. So we'll see here. There's no shortage of outside information. Ukraine is pummeling the Russian oil industry. So we'll see what happens there.
Justin, just off the cuff guesses, maybe 30-ish% harvested for corn?
Yeah, I mean, well, we're flying right now. So, I mean, I think a lot of guys are trying to get beans done. I think we wrapped up our farm yesterday. So a lot of 9% type moisture or less in beans. So really good yields, really dry. Everything's dry and fast. So you could really tell, even like where we farm, just the areas that got kind of some August rains early and didn't, the difference between 25% moisture corn and 14.
Wow.
So a lot of corn's going quick. So I think all the things Dustin said is going to be interesting here. I think we're going to fly through harvest and we're going to have a lot of bushels moving quick. So storage, storage is going to be an issue. River levels is an issue. Not getting any information is an issue. So yeah, I guess I'm kind of on the kind of bearish side, until you get 75-80% harvested. I think there's going to be some things you got to be really cautious about as you go through crop insurance. Yeah, I'm really concerned that we have a repeat of, I think Dustin said was 2023, Dustin, where we kind of expired. We kind of went sideways through crop insurance season. You're at uninteresting levels. So, a lot of growers don't want to sell. A lot of growers want to wait and see what happens with government payments, China, all these unknowns that we're, kind of all anxiously waiting on some answers to. But the inherent risk there is that if we were to have a sharply lower price move, call it, after mid-October, into March, it would be pretty devastating. So I just think you really have to be, I'd rather have, I think options are relatively cheap. I'd rather have a price floor on everything for the next 6 months and hope something bullish or friendly happens. But I think there could be a lot of risk in saying, we're only at, 420. And you hate to see a 360 type environment happen and really, really put the hurts on a lot of growers.
Yeah. I think I want to just add to that too before we moved on from the subject, but like the 2023 marketing year, we had a rally in the month of October, which is right here. It's kind of hard to see. But it's the right around that, right after that 474.25 line where the orange line starts. We had a miscalculated rally, in my opinion, by the market. And so you wonder, like, spreads narrowed, market rallied in the month of October. We had this massive break, from what we had experienced in the prior 2 years of marketing. And growers had a lot of cash at the time, right? They were selling $7 old crop corn in January 2023. So it wasn't like the need to raise cash was as high as it is today. But here's an example of like a year. I know we keep harping on 2023, but where the market had, different incentives. No one was happy with the price because it didn't fit the recency bias. And I think right now we have a lot of expected payments coming. We know the administration wants to help growers right now. So we don't know exactly what that means yet, but there is a chance in my mind when we just look at the numbers of the balance sheet of 98 million acres, and we have to have some, I think, humility and imagination of where the yield could go. I mean, maybe it's a lot lower than we expect it to be, but if it's anything above 180, 182, which I think a lot of people could imagine with how good the West is talking about. We have another billion bushels more than we did in 2023. And so this is what happened in 2023. Basically, growers kind of delayed the sale. Bushels didn't move that fast into the pipeline. The need for raising cash was not that high. And then we continued to see massive drops during the first notice date period. So one of that drops was late Feb 2024. And why did it happen that day? It's because you have all these contracts coming due, and the growers are getting calls from the commercial that says, do you want to roll it or do you want to sell it? So you jam all of those decisions into a 2-week time frame. It causes a market meltdown. We rose after that period because there's no more call. Same thing happens at the end of August. All the bushels that needed to come out of the bin, needed to be sold on basis only contracts, we hit the low of that year in late August 2024. So there's a chance that right now, this 98 million acres, if we think that a wall of corn really is coming beyond the demand that we can get right now, then it, I'm not saying that this is how it's going to play out, but if it's the same type of thing, it's really who sells first wins in the end. Now, I'm not saying to go out and sell the corn today, especially for guys that have really good balance from Farm Bill and crop insurance. I'm not predicting that the market's going to drop. I'm just saying that this is one of my concerns of post-insurance weakness, like Justin just mentioned, is that it's going to come when everyone else is selling. It's when your derivatives are not active anymore. So that's what we have to get ahead of, I think, or at least make sure that some sort of floor is in place, even if you want to keep your upside open just in case.
Well, yeah, just to that point, I mean, it reminds me some similarities there too, where, hey, we're going to get these payments. The government's way wrong on yield. The market's going to make everything right. I guess just like a lot of, hope. And I get it because prices have been crummy for a couple of years now. Input costs are stubborn. Don't really sell here, but I think to your point, just make sure you have balance. Make sure make sure you're okay if this happens, that, it's not going to be devastating, and hope for the best, so that is my concern. I think we all, the government came out with a really big yield number, like, oh, that's not there. I know some farmers in Illinois that, yields are down, or Iowa, and it's easy to get into, like, it's got to be sharply lower because this guy's 20 bushels worse than last year. This guy's 30. I think when you start running the math of all these other states, and it's still going to be a lot of corn, that you have to deal with. And we still, when the government's coming and saying we're going to come out tomorrow and throw money at the farmers because, that, to me, that says that, there's nothing in trade deal talks that's going to come soon to go bail us out. And even then, you still have to hope that you can't force a country to buy excess corn and beans in the long run than they need. So yeah, I just think looking at this really hard here, not just saying it's going to go higher because the government, was wrong and it's going to bail us out. I think it's going to not be the right play.
We've we've talked about it a number of times, but one of our loyal followers here, Max, this morning, just wanted to know, I guess an opinion on Dec-March corn and what our overall thoughts are there.
I can start. I mean, I think that's an interesting one. If you look at 2023, I believe same thing happened where Dec-March actually didn't get super wide because farmers stored a bunch, all didn't want to sell, kind of, squirreled it away. And then it got really nasty after that and spreads got wider, and maybe Dustin can confirm that. But, I think there is a chance that maybe it tries to stay narrow for a bit. I do think the massive amount of acres, low river levels, I think Dec-March could get pretty wide at the end, potentially.
Yeah.
Because, I mean, you're fighting, you have kind of a lot of different things going at it at the same time. I think just the sheer number of bushels. The one positive that Dec-March has, or even the corn spreads in general, is that the most bushels are out west, right? So the best growing conditions, the increase in acres, all those things are west of the river. So the one positive is that it's been super dry in the east. So maybe that could help the spread since they're all based off the river market. So that'd be the one caveat I would have. You can see super wide basis like we've already seen out west, and maybe board spreads actually don't get as wide as we think because of where the bushels are.
Yeah, Dec-March in 23 was, it narrowed all the way up to 12 in October. This is where we're like tearing our hair out, and then it collapsed to 26 day before first notice day. So that was, that was a thing. But I did want to point out the river levels here. So like, this is extremely low, right? Not minus 9.6 at Memphis projected. So like all of this goes into this spread. Like yes, I know we have a really good demand market on the river, but we also have, we're going to see rising costs from this. So this is a barrier to that business. And at the end of the day, you still have 8 cents a month is the alternative for what the CME warehouse storage rate is. So to get, Dec to March back into the 20s, at least again, would not be surprising to me at some point. Right now it's 16 3/4. What's the desire to maintain ownership of those receipts, control the facility? Yeah, as demand stays strong, that's a positive for the spread. But
yeah, but Dustin, even I mean, we saw SEP corn, right? That's the end of the crop year, beginning of the crop year, however you want to look at it. We're supposed to be tight. Obviously we found more stocks, so we realized we weren't as tight as we had written down. But even those spreads were no good. Right. So you think about like a September contract where you have the tightest supply of the year is no good with a big demand book on and expecting D's to be good when you're, have a whole nother crop.
At 98 million acres.
Yeah. and we saw these spreads go to full storage, multiple deliveries in a row. So, I mean, I think the default would be 8 cents a month. I mean, you should be at 24. I think at least. And you might see that for at least the next few delivery cycles.
Yeah.
And just to add, and I know we're getting a little long-winded here, but to add why we keep talking about the river levels, it's because of loading capacity and that they can't fill the barges all the way. So the cost per barge is still the same. It's just the amount of bushels you can put on per barge is less. So just to explain like why, low river levels matter is that you have, loading issues and all those kinds of things. So the cost increases. And so basis spreads have to widen to offset that. So
very, very good. That's good stuff, guys. Max, thanks again for reaching out with the questions here. Ryland, real quick here, a little bounce on Friday to close on cattle and with hogs, despite the lower cash trade, it was nice to see kind of a little bounce as well. So why don't give us some thoughts as we start the week?
Right. Yeah. I mean, looks like cattle market found a little bit of support late, but still the damage kind of done on the cattle side of things. Oddly enough, though, we did see a little bit better than expected trade in the South, 233, and this is still 3 lower from the previous week, but overall cash looking like it's finishing up anywhere between 3 to 5 lower. So, I mean, you priced in a lot of really bad news. Seemed like the market's still just kind of drifting sideways, trying to wait out this kind of big decline in beef. And we did see beef just kind of close mixed, but a new low in choice. So I think it just with October 1st notice day coming up today, we're likely to see still continued roll out of OC and into D's for those longs that want to avoid delivery. So it does feel like that's going to be kind of the focus for the day, is just a little bit of repositioning here as we get into that time frame into the deliveries. And overall just kind of feels like we're, hoping to see some kind of support here, some kind of stabilization in beef just to kind of stop the bleeding. But at this point, just have yet to really see that take hold. Then on the hog side of things, yeah, we did stop the bleeding a little bit. We caught that little bit of a bounce. Just kind of looked like a short covering rally, to be honest. I mean, we didn't really see a big change in cash on Friday here, so just wouldn't be surprised to see a little bit more follow through here as this week kind of goes through. Cash was down 20 cents at 98.72, but carcass was back up. So it just seems like there's a little bit of relief on the cutout side of things on Friday, but overall still kind of watching that cash direction. And just and obviously we didn't get the commitment of traders report, but open interest was down another 2,300 contracts. So we do think that there is some managed money presence that's starting to reduce some of their long exposure as cash markets start to try to lower here.
Very good. I appreciate the update there, Ryland. As always, we just came into the open here. We got December corn now unchanged at 419. November soybeans are up 2.5 at 1020.5. And December Chicago wheat is up 1 3/4 pennies right now at 517. Again, no USDA reports this afternoon, so we won't see crop progress given the shutdown. We appreciate everybody that tunes in, and certainly throw us a subscribe if you'd like. It doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with the AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.